been a good year for the metal stocks because this year the index is up almost 20% amid the geopolitical risk and global growth concerns. While the government support measures like anti-dumping duty for the Indian players seems to have helped, the demand and the pricing concerns do remain though. In this backdrop, how does the space look going ahead in 2026? Let me take it across to Ashesha with a bull versus bear case. Ashesha.
Well, yes, so the Nifty Metal Index is up a solid 20% on a year-on-year basis. Commodities continue to rise in the global market, especially after the Fed rate cut announcement that came in. So we decided to take stock of the factors that continue to remain at play for the entire metal space. First up, let's put the spotlight on the China factor, which is the most important and the biggest factor which continues to weigh on the metal sector. Remember, Chinese government has been trying to stimulate the economy for quite some time, especially post-COVID, but that clearly is not playing out in favor of commodities globally, and that is not really moving the needle. So Chinese government is doing its best, but the stimulus measures clearly are not sufficient and they are not supporting a commodity market globally. So this clearly is the biggest factor. China, remember, consumes nearly 50% of most commodities in the global market. So this is the most important factor continues to remain at play in 2026 as well. Other than that, global factors, remember, dollar index continues to weaken, and that is a positive for metal stocks because dollar index and metals and commodities globally have inverse relation. But also remember, China continues to dump goods in the global market in countries including India, and that is hurting domestic mills because cheaper import of steel and other metals into India is a negative for domestic steel and other metal players. So that continues to remain a problem. So this is another global factor to keep an eye out on. Other than that, inventory on London Metal Exchange continues to be on the lower side, especially for zinc, copper and aluminium, and that is aiding copper prices in the global market, not just copper, zinc and aluminium as well. But on the flip side, ferrous prices continue to remain under pressure, whether it is steel or iron ore. Chinese demand continues to remain on the weaker side, and that continues to weigh on steel prices not only in the global market but in the domestic market as well. And not just steel, iron ore prices too continue to languish on account of weaker steel demand in the global market. So that's how the inventory setup is looking like, and also when it comes to the impact of inventory on global commodities. Meanwhile, remember, domestic government is trying to impose safeguard duty in order to protect domestic mills from influx of cheaper imports into the Indian market, but that clearly is not working. Government is trying to stimulate the economy. Several steel players have also urged the government to increase safeguard duty because the current 12% is not working out, but that continues to remain a factor to watch out for, and government perhaps in the near future could actually go ahead and increase safeguard duty beyond that 12% which was imposed in April this year. Other than that, let's also talk about rupee depreciation, which continues to aid higher export demand because Indian commodities continue to remain cheaper in the global market, because of which export demand is likely to inch higher. But we also import a whole host of raw material, whether it is for steel manufacturing or other commodities, coking coal, coal and several other imports that become expensive on account of rupee depreciation. Meanwhile, use cases continue to increase, especially for select commodities like copper, aluminium, electric vehicles, data centers, renewable energy, continue to drive demand for several commodities. But on the flip side, adoption curve continues to remain slower than expected despite expectation of increase in demand from electric vehicles, data centers and several other new use cases that are now emerging. Now, as far as demand is concerned, remember, demand in the domestic market continues to remain very resilient despite the kind of challenges that we are facing in the global market. But exports, meanwhile, continue to remain weak on account of tariff concerns, on account of growth concerns in the global market. So that's how the demand setup is when it comes to domestic demand versus export demand environment. But the last and the most important factor is the change and the trends that we are seeing in the manufacturing of commodities in the global market, and the most important is decarbonization. Companies not only in India but globally are focusing on decarbonization, but that also means that costs are likely to increase going forward. Steel mills will have to focus on electric arc furnaces, which which of course involves a high amount of capex. So that's the latest trend that we are seeing in the steel and several other commodity sectors as well. So that's the bull and the bear case scenario for the metal index in the coming year 2026.
So that's all about the metal sector.